Hello, I'm Piyush Dave, a fintech professional, and today I'm going to discuss a new algo trading strategy, Heikin-Ashi Trend Catcher. We are going to call it as HA algo. It filters out the random noises and find the true market direction. Now this will help us to get the smooth trade, and it basically find out the exact reversal also. It works with the logic of candle, open, high, low, close. So we are going to find out whether the trend is going to continue or we get a reverse signal. If the trend is continue, we are going to book a profit at 0.5%. And if the trend is reverse anytime, we are going to book the loss or profit, whatever is happening on that time. 1% I kept as a complete loss, and 5% if the algo give the 5% of total drawdown in the capital. So first we are going to take 5 ticks in the market. So we are going to take almost a lot of data in terms of a candle. So now that's basically called as a warming phase. So in the warm up phase, we are going to take a data from the market continuously and create a candle. Now that candle is depend on open, high, low, close. And after that, we are going to calculate the HA candle. So like we have normal candle, open, high, low, close. Similarly, we have HA candle also. So HA close will be calculated from open, high, low, close of the candle which we have collected divide by 4. That means the average of all this. Similarly, HA high will be calculated from previous open plus previous close of HA divided by 2. Now, sometime we don't have the previous value of open and high. I'm going to discuss how that value will be calculated or consider. So for this case, I have taken 4 value. Open as 100, high as 110, low as 95, and close is 105. Divide by 4, it 102.5 is HA close. Now for HA open, we need a previous value. Previous HA open plus previous HA close divide by 2. So this is going to give HA open value. Now sometime we don't have the previous value. On that time we are going to seed it from the real value only. So from whatever close value we have, like HA open will be taken as open and HA close will be taken as the actual close formula. In the next candle, we get this from the previous candle. For a first candle, we have a problem. So for a first candle, we will seed it from real candle only. And after that, the HA close will be or HA open will be calculated from the previous open and the previous close. Now, once we get the HA close and HA open, we have the formula like this. So what is the max value of H, that is high, HA open and HA close? So we will going to find HA high, then we are going to find HA low also. Now for our case, what example we have taken, the HA high will be max of high, HA close and HA open. So maximum value from this is 110. So the HA high is 110. HA low is minimum of low, HA open and HA close. So now minimum value is 95. So we get now HA high and HA low. What is the use of this HA low and HA high? So we are going to use it to find out the uptrend. Once the HA close is greater than HA open, we consider it is a green candle. And when the HA close is less than HA open, we will going to consider as a downtrend, red candle. Now for the ATR calculation, we are going to take the ATR of 12 cycles, sorry, 14 cycle for this case. So the average will be taken divided by the 14. If the ATR is very high, that is average true range, then we consider the market is volatile and we will wait for strong trend to happen. If the market is ATR is very small, the market is very calm, we will get the faster trades. Now in the live environment, I'm going to show if the HA turn green, your cycle turn green, HA, that is this HA close is greater than HA open, we will enter into the long trade. And if HA turns red, we will enter into the short trade. We are going to continuously monitor our PNL. If in the favor, we will going to book the profit. In the loss, we will going to book the loss in each cycle. And if there is a complete market is going complete against us, then we are going to stop at 5% of drawdown of the capital. Now this is in a continuous loop. The profit and loss is continuously calculated in each cycle. So it's very smooth price calculation, no noise. ATR also help in the algorithm to find the volatility. And warm-up phase, that means continuous collecting the data, will help us to understand the real trading also. And drawdown will save our capital. Now I'm going to show you this in actual simulation environment. So now this is my algo number 11. I'm continuously generating different algos to understand the market and how it can work with the market. So now this is my exchange file, which continuously generating the price, just keep on changing. We have no control over it. So it's randomly generate the price and we have no control over this value. That's the beauty of the algo. So algo is going to work with this environment. I just keep this file open over here. So we can see here, the price is continuously changing and that is random. We have no control over it. Now the logic which I have developed, I have coded over here. Now this is my HA algo and I'm going to run this. Now algo is start collecting the data. So let me settle down this both the window side by side. Okay. So now we have the price as well as the algo running at the same time. Okay. Now we can check over here. It's in the warming phase. We are going to collect the data continuously. Now each warming phase is of 10 cycle. We are collecting the data for continuous 10 cycle. And after that, we calculate two things. We will first check what is a candle, high, low, open, close. And we also calculate the HA, high, low. And it turns out to be green. Again, the next candle in the warming phase, it's showing green. It means it says, okay, it's a bullish momentum. Now, it keep on doing this in the warm-up phase for almost 10 times. So in one time, it's collecting 10 prices. You can check out the ATR is also here. It's showing the ATR is 7.6, which is considered to be slightly on the higher side, means it says market is volatile. Because the candle size is very small, that's why the value is coming as 7. If the value is coming or 2 or 3 of the ATR, it's considered to be a calm market. Now the value above 7, 8, 9, 10, it's considered to be a volatile market. But for our case, the candle is very small. So that's why this 7 is not considered to be as much on the volatile side. See, the candle turned red. You can see the price is falling and the open, high, low, close calculation is continuously being done. And based on that, the color of the cycle is, okay, the warm up is completed and we are ready for the entry. The short entry is already been taken. Okay, it's considered to be a downtrend. So the short entry has been taken at 996. We are currently in a profit of 100 rupees, unrealized profit. If the market go beyond below certain value, then we are going to book the profit. Otherwise, if there is a stop loss, then we will do stop loss. Unrealized profit is 400. The algo is collecting the price. Still, we are in a trend of short only. The color is red only. The color is still red. ATR is 5. We are waiting for profit to be booked. If the price go below certain value, okay, 996 is our short position. Okay, it is still it has not booked the profit. We are still into the downtrend as per this calculation. Our short entry is 996. Okay, we have booked the profit. Okay, the PNL is realized profit is 1000 rupees. You can see again start collecting. It has taken one more short position at 996. Short entry at 985. It's again showing downtrend. The candle is red. Let's keep on doing this process, unrealized profit and the realized profit. So we have till now booked a profit of 1000. I have no control over this change in price. I have control over my algo only. So that's the beauty of the algo. No greed, no fear. Whatever rule says, the algo is going to do that process. If this color change, the green, okay, you can see it has booked the profit. The color turn green. Okay, still we are holding. Okay, we are holding the position. Okay, no, we come out of the holding position. Again, we enter the short position. Now we have open short position at 980. You can see unrealized profit is there. Okay, we booked this loss because the cycle turned green. We were in short position, but cycle turned green. So we booked the loss. The realized profit is 700. It was previously 1100. But as a trend change, it booked the loss. That's the logic. You can check out this. Again, it come green. We are in short position. We might book this loss also. Let's see what is happening. Okay, it's uptrend, so it has booked the loss. It's completely fine. We are still in a profit. We are in a long currently at 985 because it's uptrend green. Okay. We are in the realized profit of 300 and unrealized of 200, and we have long position at 985. We are holding the position because the color is still green. If it change the trend, then the profit or loss is going to book. Against the trend, we are not going to wait. 985 is a long position. If this trend change after the candle of the collection, then we are going to book the loss. Okay, the candle turns red. Okay, so long position has been booked. See, if the price does not come, algo will wait for price to come. Okay, currently we are in no profit, no loss zone. See, the best part of this happening over here is it has shown both the things. If it is going against us, okay, we got one more profit, realized profit over here. It has shown both the things. If it is going against us, it is going to book the loss for sure. Okay, we got one more entry at 1002, the uptrend cycle, and it keep on doing this. I've checked it multiple times in my live environment also. Okay, I can terminate this algo manually. So final realized profit. Okay, and we stop the algo. The best part of this is It has shown both the things. The uptrend, the downtrend, the realized profit, then the loss has been booked if the trend is changed, and it works very smoothly. I check it multiple times. I hope this is clear to you. Thank you very much.